In last 3 to 4 months, quite a few changes have been observed in the portfolio of Parag Parikh Flexicap fund. So in this video, we'll try to understand these changes and see how will it impact us in coming times. So stay tuned to the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. Here, I would like to clarify that this is not a detailed review of the fund. You can check my earlier detailed reviews of Parag Parikh Flexicap fund. Links are attached in the description and in the I button. So let's start the video with the basic details. Firstly, the AUM, which was more than 29,300 crores in January 2023 and has increased to more than 33,600 crores as on 30th April 2023. The expense ratio of the scheme has come down to 0.72%, which again is not that high nor too low for a flexicap fund. The benchmark index is Nifty 500 TRI. Now let's look at the sector-wise allocation. From the table, it is very clear that the fund is heavily invested in finance, followed by services and technology. And when compared to its category, its allocation is quite different except for the financial sector. Now let's look at the top holdings. As evident, HDFC Limited, Bajaj Holdings, ICICI Bank and Axis Bank are the main stocks of the financial sector, whereas overseas stocks like Microsoft and Indian tech HCL are from the technology sector. US stocks like Google and Amazon are from the service sector. Here, if you observe, most of the companies are large cap companies and quite a few are from US, which makes this flexicap fund a unique combination of Indian and foreign equity. So now let's check the major changes in this fund which has been done in last few months. Firstly, we'll check additions in the portfolio. Maruti Suzuki stock tops the chart with 219% increase, followed by Infosys at 62% and followed by Cipla Limited and Ipca Labs at 44% and 17% respectively. It has also increased its allocation in the US stock Amazon by around 3%. Now let's look at the reductions. It has reduced its stake in Coal India in the tune of more than 7% and Hero MotoCorp by around 39%. It has also made a total exit and sold its 100% stake in Sun Pharma and sold its 100% stake in overseas stock of Suzuki Motors Corporation ADR. Hence, it is now left with only 4 US stocks in its portfolio, that is Microsoft, Google, Amazon and Meta Platforms, that is Facebook. Now let's check the portfolio allocation, and in the next slide we'll see what changes it has done in its allocation. The portfolio seems quite concentrated as there are only 41 stocks in the portfolio, with top 10 stocks making around 52% of the portfolio and top 3 sectors form around 56% of the portfolio. In this 41 stocks, large cap stocks contribute around 89% of the stocks, whereas mid cap stocks form around 6% and rest 5% is allocated to small cap stocks. The portfolio mix is extremely large cap heavy. Now let's look at the changes it has made in its allocation in recent times. In January 2023, it had allocation of 71.80% in Indian equity, whereas it had 16.35% in the US equity and 11.85% in the debt and cash equivalents. When you check for April 2023, the Indian equity portion has reduced to 68.09%, whereas US equity portion has increased to 17.15%, even though they have sold their entire holdings of Suzuki Motors ADR. This increase in allocation is partially due to the recovery of US market and partially due to new purchases in the US equity. The debt and cash equivalent has increased to 14.76% in April 2023, which is quite high. I have observed that not only with this fund, but quite other funds are also having a higher cash holding. One of the reasons I feel that these funds are expecting a correction in the market and are waiting for a good opportunity. Now let's see how these changes have impacted the performance of the fund in last 3 to 4 months. If you check the performance of the fund from January 2023, it has given excellent returns of more than 11%, when the underlying index has given only 0.02% returns, and Flexicap category has given returns of around 2%. This excellent performance is due to its Indian equity as well as US equity. Surely, 3 to 4 months performance is not a yardstick to measure the fund's performance. So let's also quickly check the historical returns of the fund. Here also, if you check, the fund has outperformed its benchmark and the category with a good margin and has been in the top 25 percentile rank. Hence, we can say that the fund is quite consistent in its performance. Surely, 2022 had not been that good year for the fund, but this can happen with any fund. Now let's also check the risk parameters before concluding what investors should do. First one, mean returns, that is the average return in a year, which is 28.05, which is more than both the category average and the benchmark. Here, higher the value is better. Second one, standard deviation, that is a tool to measure how much the returns has deviated away from the mean return, which in this case is 12.94 and is also less than both the benchmark index and the category average. Here, lower the value is better. Third one, Sharpe ratio, that is a tool to measure the risk adjusted returns, which is 1.86, which is more than both the benchmark index and the category average. Here, higher the value is better. Fourth one, beta, that is the volatility of the scheme compared to its benchmark, which is 0.65, which is less than the category average. Here, lower the value is better. Fifth one, alpha, that is a tool that measures how much fund has performed compared to its category. Here, it is 11.09, which is far more than the category average. Here, higher the value is better. Hence, from the above data, it can be concluded that the fund is having better risk parameters than its benchmark and the category, which is very good for a fund. So now let's see what investors should do. But before suggesting what investors should do, I would request all of you that as you have watched the video till now, it seems that the topic is of your interest. And hence, I would request all of you to press the like button and also subscribe to my channel if you have not done till now to watch such interesting videos in future also. So coming back to the conclusion, what investors should do. First one, the existing investors. The fund has a good and consistent long-term performance with a good risk parameters. Hence, I feel that existing investors need not worry and can continue their investment in this fund. Second, for the new investors. It is a general perspective that as the fund's AUM increases, it can hamper the performance of the fund. But here, it is quite clear that it has not impacted the fund's performance lately. And I feel that it will not hamper in coming times also. As seen earlier, the fund is large cap heavy. So I feel that new investors can safely start their investment in this fund. I would like to add that I have Parag Parikh Flexicap fund in my portfolio and will be continuing my investment in this fund. I will again try to review this fund after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you have not done till now and also press the like button. Do check my older videos. Click the attached cards to watch the videos. Thank you.